You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Are you paying too much to trade options? If you're not trading on public.com, the answer is yes. Public is the only platform where you can earn a rebate on every option contract traded, and that's in addition to no commissions or per contract fees. There's no one else out there paying trading rebates, so you won't find a better deal. Bottom line, if you're paying more than $0 to place an options trade, then you're paying too much. Switch to Public and start getting rebates on every single contract traded, only at public.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's popping off in the vol market? Well, let's find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, is Mark Longo from the optionsinsider.com, as well as from the network upon which all of you folks binging and mainlining. I've been saying it all week, but so happy to see so many folks are responding well to the new futures rundown program. I was at an event this week. Folks were coming up to me just out of the blue, just talking about their love for the future show. It was fantastic. Great to hear. So glad to hear so many folks are having fun. We do delve into vol a little bit there as well. VIX futures do make it on that show on occasion. So if you're intrigued by vol, by all means, check it out. Of course, if you're listening to Volatility Views, and I know there's a dedicated Vol Views audience. We love you all, however you listen, but make sure you're listening to the full network. If not, you're missing out on a whole bunch of other stuff, nearly a dozen other shows coming at you, including the latest edition, the Futures Rundown. And of course, if you want to go above and beyond, you want pro Q&As, you want options oddities, which if you're on the pro side, you already have in your hot little hands, came at you early this week. Only one place to go, theoptionsinsider.com/pro is the place to go to learn more as we learn who's joining us on the old Vol Views program this week. First, let's go out to last year's volatility mecca. I'm hearing good things about Snowbird, Utah this year. Of course, it's Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to Volatility Views, sir.
Hey, good to be here. Happy Friday.
Happy Friday indeed. As we, speaking of Snowbird, Utah, the man fresh off the plane, also joining us, hot from all things RMC, none other than Mr. Dr. VIX himself, who, if you listened, keen-eared listeners may have heard a cameo by him on yesterday's option block when he rudely seized the phone from the Flowmaster, just knocked him aside and said, "I'm taking over your segment, Flowmaster." But nonetheless, he is back. Mr. Russell Rhoads, who when he's not doing that stuff, when he's not assaulting the Flowmaster, is moonlighting over there at the Kelley School of Business. Mr. Dr. VIX, welcome back to the show, sir.
As always, happy to be here. I actually made an executive decision and changed my flight to later this afternoon, so I'm still in the Salt Lake City airport.
Look at you, quite the executive.
But I didn't think I would be doing a very good job if I was talking to you from the back of a cab.
Quite the executive.
Because I would have been landing about 20 minutes before showtime. So made an executive decision. Also, I love my sleep, so I slept in.
There we go. Well, we appreciate your efforts on behalf of the audience. And then also joining us this week, holding down the UVX hot seat, he is a repeat offender. He last joined us back in June. So it's been about 4 months now since we checked in with him. He is Mike Green, the chief strategist and portfolio manager at Simplify Asset Management. Mike, welcome back to Volatility Views.
Thank you for having me.
All right, then. With the gang all assembled, let's dive right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, from a vol trading and trending and analysis, unusual activity, all sorts of fun perspectives. And as we're kicking off the show proper here, looks like the markets were kind of vacillating. We were mixed earlier in the session. The Dow was feeling a little bit of pain. It was in the red. The rest of the major indices were mostly in the green. Now it seems like we have ticked green across the board. Dow up slightly, not even up 0.1%, but managing to tick into the green. S&P up about 0.5%. NASDAQ up a little over 0.75%. And our old pal, VIX Cash, a turn into the dark side, 18.15 as we kicked off the show, down over almost 2.5 points, about 2 1/3 points from where it was this time last week. Man, this would have looked good, let's say, a few days ago. But I digress. And VVIX, of course, coming back down from its lofty highs, down to a 101, down 15 points from where it was this time last week. All right, a lot to unpack in the world of vol this week. Mike, as our guest holding down the UVX hot seat, we will start with you, sir. What is catching your eye out there in the vol market this week?
Well, the biggest story in the vol markets is obviously the election. So we saw this in both equity volatility and interest rate volatility as we ticked into that 30-day window where the VIX and the MOVE index are capturing the implied volatility around the election. You've seen those levels spike. Interestingly, that's happened largely without a concomitant increase in single name stocks. So it just tells me that everybody is worried about the election and thinking about the hedging. At the same time, then it seems like they're trying to price in an increased probability of a Donald Trump victory.
Oh, is there an election in the offing? I wasn't aware, so I should go check that out.
Exactly, yeah. Stating the obvious.
Yeah, it's funny. Just a few weeks ago, everyone was certain that we thought we knew the outcome. Everyone was coming on here saying, it seems like Harris has it in the bag. And I kept saying, that far out, we don't know anything. We don't know anything the day of the election, let alone that far out. And now, of course, seems like the worm is turning, at least in the election sites, which are, of course, where real money is being wagered and hopefully the best analysis is being done. Yeah, Trump has taken a decided lead just in the last week. So very interesting stuff out there. Also fascinating, this is the first real election that you could really directly trade on listed markets here in the U.S. and not on some ridiculous binary exchange in Estonia, but on platforms you've heard of. That's always nice. Regulated entities here in the U.S. You could always trade, obviously, elections tangentially. You could trade vol. You could trade the S&P. You do a lot of different things that were approximate election trades, but now you can do it directly in a lot of different binary offerings. So fascinating stuff afoot there. Mr. Meatball, now we turn to you in the land of the Southern Volatility Mecca, sir. What's catching your eye in another topsy-turvy vol week, sir?
Yeah, well, volatility seems to finally be backing off after being really stubbornly high for so long. We've seen, VIX itself looks like it's heading towards 17 next week. That convergence of VIX and realized vol looks like it's going to start to close. I don't think we're going to get like a 15 or a 16 VIX anytime soon, but baseline election vol is usually in between 16 and 17, and it seems like that's kind of where we're heading, unless we get Andrew's October surprise. You missed on our morning meeting. Andrew threw on one of the better tinfoil hats that I've heard, but I don't know that that's going to happen. You can ask him about it on Monday's option block. But the vol really looks like it's starting to pull back. We're seeing the vol ETPs take it on the chin, and some rosy pastures for the Mag 7, but also some mainline stocks, and nuclear is absolutely blowing up right now. The strength in like Oklo and in SMR and in CCJ, a lot of the uranium names, it's pretty stunning.
Nuclear has been tearing it up, lifting all things, even formerly dead names like Denison in the uranium space getting a tangential lift as a result. So yes, they are lifting anything that has to do with nuclear these days, listeners. As we go out now to the man who made the executive decision to stay behind. In fact, the Flowmaster yesterday, he was worried. He wanted to get out right after our show because he said snow was coming that night and he did not want to get trapped in Snowbird, Utah. Dr. Vic says, pshaw to all of that. Trap me if you must, but the folks must get the quality vol info. So well done, sir. The floor is yours. We'll start with the vol space, then we'll go from there, sir.
Oh, I got to formulate my notes from the from the conference. I've still got a lot to unpack on that one. But as far as what VIX has been doing this week, you mentioned the election betting markets. Some of them are pricing in a 60% chance that Trump's going to win this thing now. And somebody even came in and placed a $30 million bet, that Trump was going to win this thing. And it seems like as those odds have gone up, and then also with the structural issue where the options that feed into the VIX calculation are moving farther beyond the election, I think all of those things together have resulted in a slightly lower VIX this year or this week. So there, that's on the VIX. So there, give me a week on the conference.
I will give you a full week
because basically I was at the conference and then and then I had to teach last night for 3 hours and then I went to bed. So you got to give me a week on the conference. How
about one salient takeaway that really stands out to you right now? One session you were like, that's interesting. Like that?
Well, it's a thing. I always kind of look for the themes that come up in multiple sessions, and there still seems to be this fixation on trying to come up with a better method of getting the 60-40 type returns because they didn't work in 2022. And I don't, I'm supposed to be a derivative guy and supposed to be saying, let's all use options to get that kind of diversification. We've had instances like 2022 once every couple of decades or so. And it doesn't mean that 60-40 is not going to work anymore going forward. So I don't know if it's a lot of the participants want you to do something instead of 60-40, but that seemed to come up an awful lot. And I thought that was behind us.
How many sessions, speaking of behind us, how many sessions were there this year on the majesty of selling out of the money puts?
Not too many.
Really? Wow. Okay.
Not too many. Yeah, there were, and it's funny because the only person that really brought it up was somebody that was using it as an argument against just as a better method of capturing risk premium versus a covered call strategy. But that was on a systematic panel. I was just talking about how their methodology. Do what?
No, I said I haven't been to RMC in a few years, and it just seemed like every time I went, there was always about 4 or 5 people coming up on stage and saying, guess what? Have you heard the news? This awesome thing called selling out of the money puts in the S&P 500. And they proceed to spend an hour showing you their graphs. And it's like, have we not done this since, I don't know, before 1987?
Yeah. So there wasn't too much of that. There was a wide variety of things, which I feel like in the past, since COVID, they've done a much better job of having a wider variety of topics that are being talked about. So
that's good.
You don't have what you're talking about, where you get a lot of redundancy in the panels.
The other thing was always SPY or in this case, it's SIBO. So SPX put as a hedge versus VIX calls, and how do they perform over time, and how do you tweak them? That was the other big, obviously, topic of discussion all the time. So was there any of that?
And using using volatility for diversification purposes was huge. Some talk about short volatility, which I was happy to hear. I feel like some of the depressed volumes that we're seeing in the VIX space lately are the short vol guys getting out of the way for a little while until we don't get Andrew's October surprise.
Just the notion of whatever October surprise Andrew cooked up is terrifying to me.
I know. I don't even want to know. It's probably somebody's laptop that has a bunch of crap on it. Go ahead.
It's probably something pretty awful. Yes, indeed. Speaking of surprises, that is the subject of our question of the week. That is live right now. But we're not talking October surprises. It wasn't Andrew. It was actually the perennial permabull, Mr. Ray of Sunshine, Uncle Mike, who dropped this nugget on the Option Block show yesterday. He was talking about a post-election surprise. And at first I thought, that's absolutely absurd. What the hell does that even mean? And then secondly, I thought, well, if that comes to pass, that could be pretty horrible. I think you can maybe lump Jan 6th in as an unwelcome post-election surprise. But I thought, you know what? Let's put it out there to the audience. They are the ultimate arbiters at the end of the day. So we have a flash poll. It's going on through the end of the show. If you're listening on demand, it should still be running, so you should be able to play on the podcast side, listeners. We said, quite simply, inspired by our debate on the Option Block with Uncle Mike yesterday, do you think we'll have a post-election surprise? Yes, no, or what the hell is that? And right now, no is winning, but maybe not as much as you might think. 47.1% saying no, 35.3% saying yes. Only 17.6% in the what the hell is that camp. I thought that would be higher. But there you go, having a little bit of fun to round out our week there. If you don't like that one, just blame Uncle Mike. He is to blame for that. As we keep on rolling, listeners, out there into the land of the vol surface. Of course, October rolling off the board this week, taking a lot of that VIX funk we were talking about on the show with it last week, that election funk that was kind of gumming up the works a little bit. Now we're coming back into the show proper. And we're seeing vol and VIX do what we kind of expected it to do. November future down about exactly a point as we're kicking off the show here. The D's future down a little over a point, about 1.05 points out there. And the rest of the term structure all coming down commensurately. You go all the way out to June of next year, you still can't sniff a 20 handle. Right around 18 3/4 is about, looks like, it's about the highest we get out there right now. So let's go out to the UVX hot seat. Mike, let's start with you, sir. What is catching your eye out there on the vol surface this week?
Well, on the vol surface, I think there's two things. One is that this is actually the first election. You mentioned the betting markets. This is also going to be the first election in which we have single-day vol contracts, so single-day options on the S&P. It's interesting because the election effectively is isolated around basically the week of, and it doesn't show nearly the same pop, right? So if I'm looking at the implied volatility on the days around the election, it's only around 14, 15. That actually strikes me as low relative to the 30-day contract that protects against, the idea of an extended debate and discussion. And it's incredibly cheap relative to a lot of the other types of volatility that are measured out there. And in particular, I would just highlight that the implied correlation metric, which to me is always the measure of real fear, right? It's saying, what is the systemic risk? While that has risen, it's not. That's really not the driver here, right? It's not showing that there's any huge component. And so it really does feel like the election is not really priced for that election surprise. So to me, the market is actually voting and saying, no, there's really not that much that's out there that is going to be all that different after the election, which kind of echoes my views.
That is a good point. We mentioned the binaries earlier, but you're right. We're only 2.5 years or so into this whole modern zero DTE era. So this is indeed the first presidential election where, on top of having the binaries, you now have, of course, the same day contracts, which opens up a whole other can of worms, which makes things kind of fascinating. Mr. Meatball, sir, same question for you. A, you've had a day to think about it. What are your thoughts on Uncle Mike's post-election surprise hypothesis? B, what's catching your eye out there in the vol surface? And then C, do you think the addition of zero-day contracts is going to maybe exacerbate things or maybe mute them or maybe have no impact at all? Sir? Three-parter.
Well, I mean, we've seen zero DTE mute S&P volatility, and I think we'll see maybe that continue with VIX. But I don't know that it'll be a huge change either way. With the vol surface, we're starting to see VIX really collapse. It's now below the entire curve except for December. And the curve itself is normalized except for the kink of December, and November still trading a little bit above January. I expect that to November will likely be below January, if not today, then by Monday. The surface itself is, I look at December and that to me looks a little bit inexpensive. January, that Jan Feb, that whole back end of the curve, Jan Feb, March, April, all the way out to June, that whole complex looks real cheap and ripe for a future spread, which I think is kind of interesting, because that they're all on top of each other, which is really strange.
Strange indeed. Mr. Rhoads, sir, the last word is yours on the vol surface. B, if you have any thoughts on this whole notion of the post-election surprise, have at it. And then C, as Mike kind of brought up, this is the first real outing we have in the modern zero DTE era. What impact, if any, do you think that's going to have?
Well, I think one of the things with the zero DTE is that you can hold off on actually, putting on whatever kind of trade you want to put on based on your election outlook until like the day before. So we do see lower implied vol just before election day, and then looking at the at-the-money straddle, it goes up, and then it's just kind of steady at higher levels for most of the expirations after that. So it's not like an earnings announcement where they're pricing in a big move the day after the election, and then we move on in life. It does appear that there's a little bit of bracing for some excess volatility when. After the election's over. I don't want to say after we get the election results. So you are seeing that. And then I'm really surprised at how flat the vol surface is. And until you just think about the level of uncertainty out there, I've always equated when we're in a really narrow range, and old Jim Carroll wanted to get some data from me and work on it this week as well. So I'm not the only one that's thinking about it. But typically, after we have a flat term structure like we have right now, we do get a big move in one direction or another. There's just a lot of uncertainty around, and that's what's creating the flat surface. There's just a lot of uncertainty, or nobody has a really good opinion.
No good opinion. The vol market is not short of opinions, that is for sure. And you folks have all sorts of opinions on international vol, so let's get there next.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of VSTOXX, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European volatility benchmark, at www.eurex.com/VSTOXX.
All right, everybody, welcome to the International Vol Review, where we take a peek beyond our shores and see what's popping off in some other vol markets, namely landing over there in Europe. And how is vol looking over there in VSTOXX land? Well, as you might expect, coming in a little bit across the pond as well. Closing at a 17.25 this morning, puts it down about exactly 1.25 points from where it was this time last week, hanging out towards the lower end of its range. Still got a ways to go to threaten that 52-week low of about 12.12 that it hit last December. Of course, the high, you know when it was, August 5th, 31.16. Nowhere near that right now as well. But of course, there's a lot of waiting and seeing being done over there in VSTOXX land as well. Remember, you want to check all this data out for yourselves. Eurex.com, EUREX.com, the place to go. Or just head on over to STOXX, STOXX.com. That'll get you straight to the VSTOXX data, which I know a lot of you want to sink your teeth into. Mr. Rhoads, I know you've been busy crunching a lot of vol already this week, but what's catching your eye in the world of international volatility this week, sir?
Well, you've got the November contract only at about a 20-cent premium relative to spot, and the spot in the curve looks very similar to the curve that we're seeing with VIX. So I think there's an awful lot of uncertainty over there, but the uncertainty seems to be at a lower level. It's been a while since we've actually had VSTOXX at a decent discount relative to VIX, just because they've had a lot of European specific events to deal with. They had a snap French election. They've got some immigration issues and some other things to deal with over there. But you were seeing on the terms, the VSTOXX term structure, the same sort of shape that you were seeing in the VIX term structure, with October elevated and October going out at an elevated level. So it's telling us the same story. It's I may have mentioned this, but I'm supposed to write the financial market outlook for the Kelley School of Business this year and go around the state and present it, and which basically means I'm supposed to predict what the stock market's going to do next year. Would anybody like to take that job from me?
I say that sounds pretty fun, sir. Have at it.
Yeah. Well, but it's in the point behind that is with the amount of and I have to actually have this thing done before the election. Without having certainty as to what the leadership of the country is going to look like, the world economy is going to look like, the geopolitical situation is going to look like. I would equate a flat VSTOXX term structure and a flat VIX term structure to the worthless market headline that we hear when they say traders are on the sidelines waiting for the next event. I think that's where we're at right now.
A little bit of sideline waiting. Mike, I know you spent a lot of time watching the domestic vol scene, but I know you also have an eye on what's going on overseas as well. But what's catching your eye in the international vol markets this week, sir?
Well, on the international front, it's been interesting to watch how closely the VSTOXX volatility has been tied to U.S. volatility. If I look internationally, obviously the markets that caught everyone's attention a week ago were China. There we saw an unbelievable amount of flow, and a lot of that was bid in the option space that seems to have retreated a fair amount, and the interest is now somewhat in question. But overall, to me, the international markets right now are much less interesting in terms of their expression of volatility, other than, candidly, the absence of it in places like Europe, where the economic data has been much weaker than the United States. We're still not seeing any real signs that that's impacting equity prices in particular.
All right, listeners, remember, if you want more of all this VSTOXX talk, maybe you want to talk a little bit of daily options as well, Russell's got you covered coming up on October 24th. If you can't get enough Dr. VIX/VSTOXX, you want a whole day of him, not just a show, then October 24th is your Huckleberry, trading European volatility markets, daily options, and VSTOXX. That's what it's called. You can find the link over there at UVX.com. We'll also tweet it out during the show. So if you follow us, follow Russell, you should be able to get it, access to it. And again, a whole day of Russell. What more could anyone ask for as we keep on rolling right on into the land of the mothership VIX options? Is VIX popping off today from a volume perspective? The answer is no. It's about doing what you might expect, 355,000. That may not sound like a lot, and it isn't, but it also, when you put it into the context of the ever-shrinking, ever-eroding ADV, it sounds a little bit more impressive. The ADV has come back down to earth this week, 802 now, down another 25,000 contracts. So it's down roughly 160, 170,000 contracts from where it was not too long ago, threatening 1 million contracts a day. Still, 800K, nothing to sneeze at, but a little bit lighter. Of course, heading into the election, it'll be interesting to see. We were just talking about this is the first cycle where really we have dailies available. So will that mute the volume as well until everyone's just waiting for the day itself? Or are they going to start putting things on ahead of time? That'll be interesting to see. Either way, right now we're seeing vol and ADV coming in. In terms of top 10, we've been kind of mystified for a while now out here in VIX land, how our top 10 has been the most egalitarian that it has been in some times. 5 puts, 5 calls. Pick your poison out there. Well, those days are behind us, listeners. The egalitarian days of the VIX top 10 are dead and gone. RIP those. Instead, we have a more, shall we say, familiar setup out here this week. 8 calls, only 2 puts. Let's see if we can find those 2 puts, shall we, listeners? Number 10, cost you 156,000 contracts to break into the top 5. That's not much. That's what I would consider really kind of baseline. to break into the top 10 in VIX. Also, we're just coming off, expiration. So obviously October has rolled off the board, taking a fair amount of OI with it. So that's why that number is so anemic. But still, you don't expect to see the top 10 in VIX, the bottom part of it, really get much below $1.50. 156 right now. That gets us to one of my favorites, the Nove 45s. Then number 9, man, Waldo wasn't hiding at all this week. He's right there, listeners. Number 9, our first of 2 puts. 156,000 as well. Only about 500 contracts separating number 10 and number 9. That gets us to the Nove 14 puts. Interesting, 14 puts. You like that strike, listeners? If that's not doing it for you, allow me to present number 8, our second and final put in our top 10 this week, the Nove 19 puts. I got a feeling you might like those a little bit better. Number 7, 174,000 of the D's 20s. So of all the call paper we're going to talk about today, I definitely some of the most reasonable. Number 6, 178,000 of the Nove 40s. Here we go, right back at it, listeners. Number 5, 203,000 of the Jan 42 halves. I love when they pick the little middling strikes in between. That's always my favorite. Jan 42 half. So the 40's not doing it for you. 50s, 45's not doing it for you. 42 half is your huckleberry. Number 5 out in Jan. Number 4, 213,000 of the Nove 19s. Another, dare I say it, reasonable position here. Number 3, 237,000 of the Nove 20s. Also, again, not crazy. And then number 2, speaking of crazy, 241,000 of the Nove doubles. Right back to the fun. And then the number 1 size position in VIX options right now, 309,000 of the Nove 35. So a lot of fascinating stuff out there. I know he's been busy, knee deep in his vol analysis and vol conferencing this week. Let's see if he can spare any time for you folks, listeners, with a little bit of Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
So nice, we are contractually obligated to play it twice. Mr. Rhoads, in between your sessions, did you have time to ferret out any weekly VIX prints, sir?
Absolutely. And I came across a trade. I'm actually going to save them. I usually do them in chronological order, but I'm going to save a Monday trade for last because I really like it. So Tuesday, somebody just looking out to next week. This is kind of a good, this is kind of a trade I'm kind of neutral on. Somebody sold 160 of the October 23rd, next Wednesdays, 15 calls for $5.45, and they bought some protection. They bought the 30 calls for 26 cents, took in a credit of $5.19. So basically, if they decide to hold it into settlement, then as long as we're under 2019 in settlement, they're looking pretty darn good on that right now. The trade will do particularly well. I severely doubt that the 15 call will expire out of the money, but still, probably as long as things hold where we are right now, it looks like a pretty smart trade. VIX was at 1957 when they executed the trade. Yesterday, here's the trade that I'm not real wild about. Somebody bought 500 of the November 13th. And if you're going to play the election, you really want to look at the November 13th weeklies, not the November, not the November 6th. And November 6th is going to settle first thing in the morning. And I mean, if you want to do that, more power to you, but I think you're better off taking a look at the November 13th weekly. So you've got a little bit of trading flexibility after the results are announced, or whatever news we get out of the election. I don't even want to say results are announced, but somebody bought 500 of the November 13th 25 calls and paid 94 cents for them. I don't think that's a particularly good trade. I would do what this Monday trade did. And this trade sold 2 out of the money puts, bought 1 20 strike call and sold 2 30 strike calls using November 13th. I almost feel like I should post this on Twitter or something because of all that. And I'm probably going to put it in my weekend piece. But they sold 200 of the November 13th 16 puts for 56 cents. They sold 200 of the November 13th 30 calls for 68 cents. And then they bought only 100 of the 20 calls for $1.78. And they put this sucker on for a 70-cent credit. So, the worst case scenario on the downside is if we're at 1530 or below and they hold it all the way to November 13th. So if you think there's going to be any sort of, or we're just even going to be above 16, it's not such a bad trade. If you think we're going to get some sort of spike that you can trade around, it's an awesome trade.
So a short strangle effectively in the weeklies, but they're hedging themselves to the upside, but only half.
Exactly.
Interesting.
Exactly. So they and what I think you do with this trade is you basically sell those if we get a move up to the upper 20s or so, you sell those 20 strike calls, and then you maybe if you're forced to, you can roll up to like the 40 strike calls or something like that to hedge, just in case, and turn that short call into a short 30 something other strike call spread.
That's interesting. He could have a future or two in his back pocket against that as well. Maybe that's why he's not hedging too much to the upside there. Interesting. You got to be obviously that one. I was just gonna say the weekly, the futures market in the weeklies is not particularly liquid, so that might be the reason that they're doing it the way that they're doing it. Like if we were in the standard contracts, we wouldn't see the future part or that kicker part. So. Yeah, it's intriguing. It's definitely not a set it and forget it grandma ball trade. You gotta be quick on the trigger finger if we do get some upside in that time frame.
Yeah.
Usually we see the ratios the other way. Obviously, sell 1 buy 2. We don't see sell 2 buy 1 too often, but to the upside at least. Yeah. But intriguing structure. I could see why it certainly stood out to you. I'll be curious, listeners. Yeah. Our chat's a good barometer for this. Are you down for this, listeners? I know. Effectively a short strangle with 50% kicker to the upside in case something crazy comes to pass. I'm intrigued. I'm intrigued by you folks out there. We typically counsel don't go the net short units route, but if you're a little savvy in the VIX complex, you could certainly make do with that. But again, you can't sleep on it. Speaking of sleeping, like we said, is VIX asleep today, listeners? The answer, it's not blowing the doors off. 355,000. It's respectable, like we said. The big dog today, 63,000 of the NOV 15 puts. Interesting. That's pretty sizable. Followed by number 2, 36,000 of the NOV 14 puts. Got a bit of a put palooza in our top 5 today. Listen, by the way, both of those is size OI on both, so neither of those are opening. At least we don't know for right now. 21,000 for number 3 of the D's 14 puts. D's 14 puts. That sounds interesting as well. We all know the seasonality of VIX, and I could certainly see threatening a 14 handle by that time. Then we have 17,000 for number 4 of the Feb 16 puts all the way out to February. Those are opening. And then number 5 today, listeners, 13,000 of the NOV 25. So one call sneaking in there. Looks like they overwrote those. So a lot of short vol playing out there today. Yesterday, a little bit more paper on the tape. Still not exactly a banger. 669,000 contracts on the tape. The big dog out there, 36,000 of the NOV 23s yesterday. So interesting. Number 2 also as well, 36,000 of the NOV 17 puts. And then number 3, 33,000 of the Jan 50s, 5-0s. Also not opening. So this paper already on the Jan 50s. Number 4, 32,000 of the NOV 19 puts. And number 5, 32,000 as well of the NOV 19 calls. Wednesday, the banger day of the week, I think for obvious reasons. We had a settlement going up then. 1.14 million contracts on the tape. 107,000, that was your big dog on Wednesday. That gets you to the NOV 16 puts. Those bad boys were opening. Followed by number 2, 93,000 of the NOV 14 puts. Also opening. This could be a put vertical. Could be just straight up gobbling up some downside out here. We've seen both of those in the past. Number 3, 40, drop off quite a bit to number 3. 43,000 of the NOV 45s. Number 4, 43,000 as well of the NOV doubles. A little bit of funky upside vertical action. Maybe number 5, 32,000 of the D's 45s. Tuesday, heading into settlement, no slouch either. 921,000. So 2 days at least this week above the ADV. The big dog on Tuesday, 65,000 of the October 20 puts. Followed by number 2, 57,000 of the OCC 25s. Number 3, 54,000 of the OCC 19 puts. Number 4, 49,000 of the OCC 21s. And number 5, heading into the day that OCC goes away, 43,000 of the OCC 23s. On Monday, kind of a sleeper as well, 664 on the tape. The big dog on Monday, 37,000 of the NOV 22s. Followed by number 2, 30,000 of the NOV 15 puts. Number 3, 27,000 of the October 20s. Number 4, 25,000 of the Jan 21s. Looks like they overwrote those, and those were indeed opening. And the number 5, 24,000 as well of the NOV 19 calls. Mr. Meatball, kind of a hit or miss week. Some days we had a flurry of paper. Other days, like today, kind of sleepy, kind of quiet. Anything catching your eye on the VIX options docket this week, sir?
Yeah, today, huge amount of November puts being bought relative to total open interest. That they're buying the Nov 15s for 30 cents. I kind of like that trade. Yesterday, so Thursday, biggest trade was the D's 15s and the D's 14s. Some activity in May. Lot there. On Wednesday, the big trade, more downside put. Biggest trade was a seller of the Nov. No, they're separate trades. Sorry. Biggest trade was the Nov 14 puts, and looks like somebody traded the 16 puts. They might have sold those. I'm not sure what exactly, but those went up for some size. Those are real active. Tuesday, biggest trade was the Jan 21 calls, but for this week, no 100,000 lots. Not even a lot of 50,000 lots. Relatively muted week from an activity basis as a whole. Monday, biggest trade was the Nov 22 calls, but outside of Monday, the biggest trades have all been downside. So I think we're starting to see some pretty heavy betting that the vol is going to relax here, which I think is kind of interesting.
What were those Nov 15 puts for 30 cents? Those are your new Huckleberry, sir?
You know what? I got to tell you, I bought some of those today.
That does have you written all over it. I know you had some of the OCK 18 puts before as well. What'd you end up doing with those?
Let's not talk about the OCK 18
those
puts.
Ones. Yeah, okay. I feel. I ask because I feel your pain, sir. I feel it. That one's. It's very rare that it's something just seems like a ridiculous slam dunk to me. That one just leapt off the board at me. And
it did, and it worked until it didn't.
It worked amazingly well until it didn't.
So,
yes.
I did well with the first trade, and then my mistake was pressing.
Yeah, I feel all parts of that, sir. So yes, I share your pain. Just not very rarely do I see one. I'm like, oh, that one's a screaming buy, and yes, and all of us, I think, underestimated the little bit of election flummox getting worked into the VIX calculation just long enough to stick a fork in those bad boys. So a lot going, I won't say a lot. Some things going on out there in the vol space this week. Mike, anything catching your eye in the VIX option space before we roll on, sir?
Not so much in the VIX options. I'll be honest, I'm not going to offer a ton of commentary there. We have a couple of products that are involved in systematic trading around that. And one of the things that I always think is interesting is hearing people noting trades that are happening in largely systematic portfolios. I'm seeing an awful lot of demand for shorting that volatility and either buying protection in various forms or seeking different places on the curve to express those trades. Some of those that I'm hearing are at minimum systematic in their construction. So I think there's just an awful lot of that going on right now. Still the income replacement story.
Let's see what kind of story we have going on out there in the realm of the VIX ETP, shall we? Let's start, as we are wont to do, in Inverse Town out in SVIX land. Catching a little bit of a bid this week, as you would expect. Vol is coming back down, so SVIX finally catching a little bit of a lift. Is that enough to finally make people, by the way, 2560 as of a few minutes ago, up about 1.25 points on the week? Is that enough to finally get people to start trading options in this thing again? Seems like the answer might be yes. I mean, the ADV continues to erode to nothing. It's down another couple hundred contracts this week, below 6,000 contracts a day, 5,800. It was threatening 20,000 not that long ago. Now we're seeing today 6,000 contracts already on the tape. So maybe the worm is turning. Maybe all they want is upside in SVIX. They don't know what to do with downside. They just don't want to trade the options. But on the upside, they'll come to play apparently because they're trading today out there. Let's look really quickly and just see what are folks up to out there in SVIX land today. Looks like the big dog out there today, such as it is 1,000 exactly of the Nov 15 puts. These are expiring on the 1st, so in the weeklies. Interesting. Looks like paper sold those. And then 551 of the Nov 20 puts in the regular monthly. Let's see. By the way, how did those go up? Those went up. They sold the 15 put. Oh, for a nickel. That's exciting. The market they got was no bid at $1, and they sold them for a nickel. Oh, there we go. No bid at $1. Tell us how you really feel, market makers. 1,900 of the Jan 36s. That is the big dog position out there in SVIX right now, followed by 1,500 of the OCC 20 puts going the way of the dodo today. So those don't seem like they're going to come into the equation, but I guess crazier things have happened. What would it take to get SVIX to a 20 by the end of the day? That would certainly be interesting. Mr. Rhoads, anything catching your eye in your beloved SVIX this week, sir?
Well, yeah, and so I just pulled up the block trades, all 6 of them from today, and one of them is somebody traded 100 of the November 15th 30 puts. They traded at, I'm not even going to guess what the price was 465. The bid-ask spread was 280 by 6.
Ah, yes.
No wonder we're not getting volume in here.
No wonder why nobody's trading this thing.
Yeah, that's what's catching. I mean, I don't mean to be, a negative Nelly here, but it does actually look like they sold those 30 puts and bought some different dated 24 puts. But again, the bid-ask spread on some of these trades is ridiculous.
You don't like no bid at $1 for those 15 puts? That's not a good market to you,
well,
sir?
I wasn't even going to bring that one up because it's, but that's pretty sad as well. But then when you pull up the option montage, it doesn't look that bad. Well, yeah, it does. It looks that bad. So they got I'm going to be with one of the SVIX people in a few days. Going to see if there is something that they can encourage some market makers to step in there and trade these things, because it's unfortunate. The underlying is traded 700,000 shares today. So, there is volume in the underlying. Maybe I'll go back into market making and I'll be the SVIX market maker.
I was going to say, if all of us could kept making markets no bid at $1 and pretty much $3 wide on these puts, you probably would still be market makers today.
Yeah.
These are kind of ridiculous. Yeah, I'm looking at these puts right now. I'm surprised they traded them 465. That's almost midpoint of their ridiculous market. So, yeah, wow. Yeah, that is definitely something that is hurting. And you're right. When you look at the chain at the money, it doesn't look that oppressive. It's certainly not no bid at $1. But obviously, when you start getting into the weeds, and God forbid you try to do a spread, no bueno out there. Are you still long the underlying and overriding calls against it?
I'm long the underlying in 3/4 of position, and I don't have any short calls against it right now. There hasn't been enough premium, and periodically when I've checked in when VIX has been lower, just to check in on SVIX, it's not reacting in the way that I'd really like. But you see some silly markets, even for at the money options, if you're thinking about selling a call. And if I decide I want to buy it back to keep the position, I'm going to get hit both sides on it. So it's kind of difficult.
You don't want to hit that no bid?
I just might have to switch over to VXX or something like that.
Uh-oh. Don't tell the UVXY Defense Force. They'll be super excited.
I know.
Mr. Meatball, you certainly picked a challenging time to dive into the SVIX fray, sir. It's been... Ever since you launched that product, it's been kind of choppy out there in SVIX land. What's catching your eye out there right now, sir?
It spent the last, 10 days being having a negative roll. And now that our yield zone has moved back into the positive territory, Andrew and I were actually picking up some calls today. And also, I was buying some more stock here. So I'm liking it back up to 30, and then we'll see from there. I think that if you think that VIX is going to go back to kind of normal election, then they're kind of election premium, so somewhere around 17, then VXX or SVIX is going to slowly rally and get back toward, over the next 2 weeks, it should break 27.
Do these crazy wide markets that Russell and I were just talking about, do those impact you a lot in your strategy?
You can get stuff done in there. The markets are annoyingly wide, but you can get stuff done.
That has been kind of my experience. Like, you see a market and you're like, whoa, I don't even want to step into that. And then you put something in there, and sometimes you get surprising fills. I have mentioned that before. It's not reliable, but it does happen. So yeah, it's a strange product, listeners, by all means. We're kind of coming up against it, but Mike, I'll give you a little time here at the end of the show. This will be your elevator pitch, because we may have an opening here at the end of our show to maybe add some more vol ETPs into our weekly analysis. We don't have a lot of time really to get into the VXXs and UVXYs of the world. Russell can't even force him to talk about him. Gun to his head. SVOL right now, listeners, 2184, up about 14 cents. Doing some paper out there, about 400 contracts. The ADV is right around that level as well. So starting to build some options flow out there as well. Mike, if I'm a listener right now, give them your elevator pitch for SVOL. Why should they be paying attention to this product?
Well, there's two separate issues associated with it. The primary issue on the XIV product, and I would argue on the SVIX as well, is simply that the level of volatility is one that almost guarantees you losses over time. When you think about products that are running at 50, 60, 70, 80 type vol, simply a few days like we experienced back there in July can wipe out a year's worth of gains almost instantaneously. The key differences with SVOL are that we run it at a much less leveraged component. So it's basically the equivalent of a quarter VIX contract. We have the flexibility to move that product across different parts of the vol surface. And so instead of being in the first to second month where you have that extreme version of a VIX spike or that extreme risk of a VIX spike, we will typically occupy this in the second to third or in the third to fifth sort of time period in which you can get a more consistent contango to allow you to profit from the selling of volatility. And then the last thing is we spend a portion of the proceeds on a fixed budget, basically buying protection against the extreme moves in the volatility index. Parts of my research on the volatility surface itself actually shows that there's an increasing proportion of positively skewed events on the VIX that correspond to an increasing proportion of negatively skewed events on the S&P. Buying that protection gives you a fixed budget that allows you to somewhat safely sleep at night, recognizing that if an extreme event occurs, you're not going to experience the wipeout that you might have with a product like SVIX or with an XIV. And you can really see that play out over the August time period.
Well, you answered my main question, which was, are you looking at what SVIX did, buying some upside to hedge? It sounds like you've already cracked that. So give our listeners a little bit of insight. What is your methodology for that? How far out are you going with the protection? How far out of the money? What is the methodology for that?
Well, we have a fixed budget, and so we will ultimately make sure that we are protected at minimum the nominal component. We'll effectively seek out or price seek that level. And so occasionally you'll see us with calls on the VIX that can be 2 to even 250% higher. We're not going to spend more money. We'll just buy more protection at a higher price. The second component to it is, again, identifying kind of where you think that sensitivity is or where that cheapness and risk really resides. We generally find that resides about 100% higher in terms of the volatility surface, maybe even a little bit more than that. And so, again, we're running a fixed budget. We don't want to overly impinge on the return. We recognize that hedging is in general a lost cost, but in a product like the VIX, in which you can experience these kind of extreme moves, we found in our research that it's well worth buying that protection, particularly as these products get more crowded and more widely followed. The risk of an XIV type event in which the volume that is available in the volatility surface is overwhelmed and creates a catastrophic move. We just saw an example of that in August. That's what we're really seeking to protect against. And so when I say a variance product, all volatility is variance. Variance is simply the square of it. We're looking ultimately at a situation here where that convexity, that extreme move that can occur is most aptly expressed in variance terms as compared to volatility terms.
There you go, listeners. We were just lamenting all of our issues with SVIX. So if you're looking for perhaps an alternative in that side of the space, allow me to present SVOL, again, about 2182 right now. Doing some options paper. Looks like the big position out there right now are about 1,600 of the DEES 20 puts, so slightly out of the money puts, close to $2 out of the money puts. Like they started buying them. Looks like they bought a bunch this week actually for around 20 cents. So intriguing, yet another name to add to our analysis, listener. Speaking of analysis, it's that time. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to wrestle with what the vol gods hold in store for us for the coming week. Last week, it was myself and the once future and present Dr. VSTOXX. We went fire in both barrels last week, listeners. VIX and VSTOXX. By the way, coming to the end of the show, we have VIX right around at 18.15. VSTOXX, obviously, we said earlier, closing at 17 and a quarter. I was at 17.85 on VSTOXX, so not bad. I'm still kind of dialing in my model, listeners. Russell was at an 18.10, so no joy for either of us there. VIX, I was at an 18.65. Russell was feeling his oats. He was feeling almost a 20, 19.67. So fully a point, 1.02 points between us last week. No joy for either of us there. That means, you know what, Mike, as our guest, you get the dubious honor of going first, sir. What are you feeling this time next week for VIX? And if you're feeling doubly daring, you could throw a VSTOXX prognostication out as well, sir.
I'm not going to be doubly daring, but as I alluded to, I think the volatility surface is basically priced in the election and the fears associated with it. If Trump continues to gain, you'll probably see that ease out, reducing the probability of that November surprise. I don't quite know what I feel like an outsider on the joke with the October surprise. But as we continue to move higher and we price higher, you would expect to see volatility retreat. I wouldn't be surprised at all to go into next week with a 16 or 17 handle on the VIX.
So you want to go 16.5?
Yeah, let's go 16.5. There we go.
16.5. There we go for Mike out there. All right, Mr. Meatball, you are next up, sir. If you feel like firing both barrels, have at it. What is your palindromic nonsense for us this week, sir?
Well, I can't go 1661 because Mike just went 16 and a half. 1771 seems too high. I'm just gonna go for it. Let's do 1551.
Ooh. Let's
say we oversell. Let's go for it. Let's go.
Are you talking your puts up, sir?
I am.
You got any VSTOXX for us, or is that a bridge too far, sir?
No, 1661.
All right, there we go. Reaching out on a limb there. Your methodology, sir, is an inspiration to the masses. 1661 for the meatball. Mr. Rhoads, sir, both of us swinging and missing last week. What do you have for us this week on VIX and VSTOXX, sir?
I'm going to go with 18.18 for VIX. I'm going to go with 17.17 for VSTOXX.
You're doing an almost a palindromic adjacent strategy.
I'm doing the dyslexic palindromic.
Yes, the dyslexic palindrome. That is what you got here. All right, listeners. Last for me here, listeners. Yeah, it's another weird one out here. I'm going to go for VSTOXX. I think it's reasonable to expect some continued erosion out there. I'm going to say 1676 for VSTOXX. That gives me a little bit of breathing room between me and the meatball. And then on the VIX side, I'm going to say something kind of keeps us afoot. I'm going to say 1855 for this time next week. All right, there's your markets, listeners. 1551 on the downside for VIX, 1855 on the upside. A rare upside day for me. Our markets on VSTOXX ranging from 1661 all the way to 1717. And Mike, I appreciate you taking some time out of your schedule today to join us. You kind of gave us a little bit of an overview of SVOL. If folks want to learn more, sir, where should they go? What should they do?
Well, as always with Simplify, the best place to go is our website, www.simplify.us. There we have a listing of all our ETFs, as well as performance history and holdings, so that you could actually dig into something like SVOL and fully understand exactly what is in the construction that will change over time based on where we see the most attractive opportunities to sell that volatility.
I like it. We might have a new addition to our analysis here on the show, SVOL listeners. So if you're tired of hearing us just bemoan SVIX, we'll throw SVOL into the analysis. Maybe have a little bit more fun. Check it out over there, listeners. Simplify Asset Management, the place to go to learn more. And Mr. Rhoads, where should they go if they want to check out your full day of all things VSTOXX, sir? Coming up soon.
Well, if you subscribe to my Substack, I don't do this very often, but I'm gonna send out the link to that event to all of my subscribers. So that's one way to get that. Anything I do, I put out there on Twitter, basically. So just add Russell Rhoads, 2 L's and no E in the Rhoads name. If you put an E in the Rhoads name, you get that guy down in Tampa that's a weatherman or something that got a DUI. That's not me.
Tampa weatherman probably had his hands full recently, so maybe he hit the drink again.
Oh yeah, I got to check in on him.
He probably hit the sauce again after last week out there. But check it out, listeners. If you want a full day of Russell, and who doesn't, then definitely register for that webinar. And last but not least, Mr. Meatball, we're all here lamenting SVIX. If you want someone to hold our hand and tell us how to do it, where should we go? What should we do?
Go to optionpit.com and follow me on Twitter at optionpit.
There you go, listeners. Give the man a follow over there, optionpit.com. That is going to do it for us on the show today. Also going to do it for us on the network today. If you're hanging out in the pro, check the podcast feed. We already got Options Oddities in your hot little hands. I will be heading out shortly after Vol Views today. Back again on Monday, of course, with the option block all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
Are you paying too much to trade options? If you're not trading on public.com, the answer is yes. Public is the only platform where you can earn a rebate on every option contract traded, and that's in addition to no commissions or per contract fees. There's no one else out there paying trading rebates, so you won't find a better deal. Bottom line, if you're paying more than $0 to place an options trade, then you're paying too much. Switch to Public and start getting rebates on every single contract traded, only at public.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views. The International Volatility segment is brought to you by Eurex, home of VSTOXX, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European volatility benchmark, at www.eurex.com/VSTOXX. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.